Hello traders and investors, I'm LA Little. This is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. We're using volume, time, and price, folks. Tape reading, looking for supply and demand on the charts. That's where you learn. And I'm going to give you a very good example of it tonight that we called last night, and that was the 2-bar reversal. I want to show you why that worked, or at least had a high probability of working, which is what you're always looking for, and what it really means. I mean, how can a market turn when it's so bullish? There's only a couple cases that happens. 2-bar reversal is one of them, and I'll give you my interpretation of why that's the case. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little, and if you haven't subscribed and you want to the show, just reach up on the right hand corner, hit the subscribe button. Anytime I push the public content, you'll get a notification. Is while you're up there or while you're messing around watching this show, tweet it. Tweet it to your friends, retweet, do a Facebook share. Any number of those types of shares, definitely appreciated. Now, last night we were talking about the possibility or the probability of the NDX and the NASDAQ moving lower today. That's exactly what happened. They were the ones that led on the downside, and they did it all at the end of the day. Mostly they were down early, popped back up, made a new high, and then gave it up right at the end of the day. So we had the NASDAQ, the NDX trading to the downside. Gold, silver, oil, bonds, all of this safety type trades, right? They traded back to the upside. You had pressure in Europe. You had somewhat pressure here, although it was not that heavy in the US markets. Moving to the charts, let's move over and look at, I'm going to start actually with the NDX. Now, last night I called a 2-bar reversal. Now, a 2-bar reversal is the strongest of the 2 reversals that look similar in pattern, and that is an over, under, or an under over with lighter volume. And that's what you had yesterday here on the NDX, and you also had it on the NASDAQ. You didn't have huge difference in price volume, but it was enough of a difference. And the main thing is that angle of ascent was very steep. And when you get that, a compressed move in time and price, and you get an over-under, you have a good chance of a reversal. You also happen to have yesterday a doji. Now, what it did today, if you look at it closely here, is you actually went up and set new highs today. So you did a 58.90.88. Yesterday was 58.88. The day before, the wide price spread was 58.81. So you went over, back under, you failed again on price and on volume. That tells me that you're probably going to trade down tomorrow, and I would think this little gap area is where you're going to try to go. Now, why does a 2-bar reversal work? You know, a lot of times people ask me, okay, how do these things work? Why do they work? Reversals in general on a strong market are hard to get, right? They're hard to get trades to the downside when you have a market so strong. And the only way you can get it really is kind of 2 scenarios. One is you just have this compressed move up and there's no support up underneath. That's how you can get a larger move to the downside, right? So you can get a larger spike to the downside on that kind of case. The other case is where you have swing point lows that are congruent, and all the stops build up in that area, right? When that happens, right, then you can get a faster move to the downside as well. And so you can get a big spike down that way, or you can get it the other way. And so that, to me, are the 2 cases. A 2-bar reversal gives you that opportunity. It says the next bar should trade sideways to down. And today, of course, it did trade down, and the 2-bar reversal did what it's supposed to. Now the big test comes up, and that is that can you regroup, hold maybe at this spot, and spike on up and make a new high? That's going to be the key test, because if you can't, like I just said, there's nothing much underneath, right? If you look at this, the next spot down is down in here. And so you can get a larger move to the downside before you find support. And that larger move there is almost 200 points. Of course, you've gone up so much, it looks like a little speck up there. But 200 points, if you're holding a bunch of high volatility, high beta stocks, you're going to feel it. And so that's the way it works. S&P, let's see what the rest of these look like. Okay, so you just come down into the congruent area. This is where it has to hold. If it doesn't, again, can get the larger setback back into the top of this bar, 24.15. Looking at the Russell now, the Russell had the reversal yesterday, did a hanging man, went back up today, went right up to the top of yesterday's bar, and where does it close? Underneath yesterday's bar. This one also wants to come back in and test into that support zone, which it's now a support zone, right, which was the zone before that most of the trading took place in. So now you're going to try to come back into that area, right, and you're going to try to trade back into it. And if you do, if you get back into it and you stay into it, then you can go to the bottom again. And so that's the way the Russell's set up. I don't know that it makes sense to go over much else. I think that gives you a good feel for what's happening in these markets. Looking to try and trade lower tomorrow. It's been a bullish market. It's going to be hard to press them down, but it looks that way to me, that they're going to get at least another push to the downside, and then we're going to see if the buyers want to step in one more time. That's it for tonight. Have yourself a great one. Thanks for joining me. Take care, and I'll see you tomorrow. Good night.